person with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled The Key Numbers to Know for 2024. Mike, for retirees, no number is more important than that Social Security cost of living adjustment. What are we seeing in terms of the bump up in Social Security payments next year?
Yeah, well, fortunately, most individuals will be receiving an increased payment on Social Security. Unfortunately, it's not going to really come close to what they saw in 2023. So in 2023, Social Security recipients saw a nice bump up of over 8.5%. Coming next year, you'll see a much more modest increase in the 3.2% range on those Social Security benefits.
Now, the other piece here is that most people collecting Social Security also have their Medicare Part B premiums taken out of those payments each month. What's happening on that front?
Yeah, that's correct. And, that was one of the real kind of strange things about 2023 is not only did we see very big cost of living adjustments, but Medicare premiums actually came down. Next year, we're reversing that trend. We're seeing Medicare premiums go from about $165 a month up to $175. And so that's going to be a further drag on those Social Security checks. The Medicare Part B one is a bit of a tricky subject, too, because those are income-based. If you're not familiar with IRMA, a good thing to familiarize yourself with, especially if you're selling a home or investment portfolio.
Our guide this month is titled The Key Numbers to Know for 2024. And it includes a discussion of these topics and more. There are two ways to request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you on a Jobs Friday, and at 8:30 this morning, we received the jobs data just like we do usually the first Friday of every month, but in this case it was the second Friday because the first was on the first Friday, and they didn't have time to get it done. They just needed one extra week, and so we got the jobs data today. Here's what we ended up seeing. Headline number came in at 199,000 jobs created. Unemployment rate dropped down to 3.7%. Those are the two big ones that typically get reported. Now remember, the jobs report actually is two different surveys that are combined into one. Why they do that, I really don't know. It really should be two separate reports because you can't mix data from completely different sources and say it's saying something. So let's start first with the household data. They go out, they survey a bunch of households and say, hey, what's going on? This actually showed better job growth than the establishment data. 747,000 jobs created according to the household data, which is just a big number. Again, it doesn't necessarily mean anything. These numbers can diverge, so one's not inherently more or less right than the other. Number of unemployed people, according to the household survey, dropped by 215,000. So that combined with more people coming back in the labor force, you end up with the participation rate going up to 62.8% and the unemployment rate down to 3.7%. Then we turn over to the establishment data, where we have that 199,000 jobs created there. What do we see here? We see average hourly earnings up by 0.35% for the month. We see what I refer to as aggregate payroll growth. Average hourly earnings times that kind of growth times the growth in actual payrolls, and that jumped up a little bit from 5% in the or downwardly revised 4.86% in the prior reading up to 5.35%. So a little bit of a bump there. We'll talk about all this and why it matters going forward. But the end result, Paul, is this is a report that was a little bit hotter than most people were anticipating here. And so the immediate reaction is bonds sell off a little bit. You got the 10-year up about 9 basis points to 4.22%. 1 point this morning, it was up 15 basis points, so it pared back from that. And you had equities negative originally, but equities have since turned positive with, again, I guess if you want to think this out, hey, if you're heading towards, growth if growth is not going towards recessionary numbers, then companies may be able to earn more, and so you can see equities grow a little bit. So that's kind of my initial takeaway. Your thoughts?
To me, I had a lot of expectations going into this report. I thought that this was sort of a pivotal report given what we had seen from the data that we got earlier this week regarding the labor market, where we saw the amount of jobs available throughout the country had come down about 6.5%. That ratio of those jobs available versus those looking had also come down quite substantially as well. So I was looking to see if we'd see some data sort of falling up in that same trend of the labor market weakening perhaps. And ultimately I walk away from this report, Chuck, just sort of saying, I don't really have a huge conclusion. This idea of it being slightly hotter, as you mentioned in our discussion off air, 199,000 jobs being added, slightly over consensus, but we know how frequently these reports can be revised, so it's not as if you can just say authoritatively, like, hey, this was so much better in terms of job growth here. The unemployment figure coming down to 3.7% also sort of adds chinks in the armor of this idea that we were seeing a significant uptick in unemployment to trigger the SOM rule. So that sort of pared down my expectations for incorporating that as an assessment. Just to be clear on that rule, it's the 3-month trailing unemployment rate. If it increases by 0.5%, it signals a recession. With it coming down from 3.9% to 3.7%, that very likely drags down that 3-month trailing average here. So that really doesn't come into play. So overall, I sort of step away from it saying wage growth was right in line with what we expected. The number of jobs created, not overly concerning, but not further evidence that the labor market is weakening. And so I just sort of just sit back and say, again, to be determined, unfortunately. I don't take a lot of conclusions from it.
Yeah, I don't think that you can necessarily say a ton about one data point, which is what this report is. The trends from the last few months are still pointing towards slower aggregate payroll growth, towards higher unemployment, and towards slowing job growth in terms of the number of jobs added on a monthly basis. The other thing you got to remember on this one, this does incorporate the UAW workers coming back into the workplace, right, because those strikes ended right at the end of October. So that gets picked up in here as well. So I think that overall, this is one where if you were to duplicate this for 3 or 4 months, then I think the story changes from, hey, there's a slowdown that's happening in terms of, growth and things like that, to, okay, there's a soft landing here, but now the danger shifts back to reaccelerating inflation if you start to see more of these. Mm-hmm. But it's just one of them, so I don't think you can get too hyped up about anything that happens here. Where this does matter, as far as where the rubber meets the road in markets, in my opinion, is in the bond market in the short term. We've talked a little bit about the what's called the SOM rule. It's named after Claudia Somm, who is an economist. And here's the premise of it. I'm going to quote from Wikipedia because I think it's a really straightforward way to explain it. The SOM recession indicator signals the start of recession when the 3-month average of the national unemployment rate is 0.5% or more above its low from the last year. So as an example, if we look at the last year of unemployment rates in the United States and say, hey, what's the low that we hit in the last year? It's 3.4%. Mm-hmm. That's the low that we got to. So when the 3-month moving average is more than 0.5% above that, you say, okay, we're on the brink of a recession. That it is predicted all of the recessions from, I think, 1950 onward. Doesn't mean that it always will. It's just, again, this was built back through back testing, and so there will be a time when it doesn't. But if you're trying to play this out, if the unemployment rate dropped to 3.7 this month, in order for it to average 3.9 for a 3-month period, your other 2 data points that you're throwing in now have to be north of 4.2. Mm-hmm. And the one before this wasn't. The next one after, you're probably not going to see unemployment go up 0.5% in a month. And so the thinking is, hey, if this one had come in at like 4 or 4.1, then you had a chance of that SOM rule triggering in January, which the Fed, why this matters, it's not because it's right or wrong, but the Fed does not want to get caught in a recession saying we didn't do anything.
Sure.
And so if you have a potential SOM rule trigger in January, you got a Fed meeting in January later that month, you would have had January cuts on the table just because the Fed says, we might need to do something here.
Right.
With this, you've basically reset the clock in that, A, by the time you get to a potential trigger, that 3.4 that we saw on unemployment, that was from December of last year. January of this year. So that's going to roll off that 12-month number, that 12-month low. It then takes us, there's another one in April, so it's still available then. But your trigger is now looking, at a minimum, probably March or April, which means maybe you get cuts in May or June.
Mm-hmm.
And so what this does from a realistic boots on the ground, how does this affect markets perspective? The probability of cuts in January is now effectively 0. And the cuts get pushed out just a little bit further next year, where you're probably not even seeing one in March of next year. That's pretty darn pretty darn unlikely now. And instead you're looking at May or June as your potential first cuts. And we see this, by the way, when we look at how things are being priced in. January, before today, if you look a month ago, a week ago, had a 14% chance of a cut.
Mm-hmm.
It's basically down to 0 now. It's a 6%. It got cut in half. If you look at March, a week ago, March had a 55% of a chance of a cut. It's down to 47. That's still too high, in my opinion. I don't think you're getting cuts by March just based on you're not going to have a trigger by then. I think if you look out to, May, June, now what you've got is, okay, there was a chance of, 2 cuts happening by then. Now it's really down to 1. This is what this has effectively done. And so that's why you see yields going up today, where the 2-year Treasury is up 10 basis points. The 3-year Treasury is up 10 basis points. Pretty much everything from 2 years out to 7 years is up about 10 basis points. So this jobs report, there's nothing really bad in it. It's something where if you had 3 or 4 like this in a row with wage growth showing what it is, you probably start getting a little bit nervous about inflation rather than the soft landing that people are hoping for. And recession becomes off the table if you have 3 or 4 of these in a row.
No question.
It's just one. We'll see what happens here, but a little bit hotter than people were anticipating here. Let's take a quick break here, and when we come back, let's see. We talked about the Fed. Do we want to do more Fed talk? Do you have anything else related to the Fed?
No, I think you did a good job of summarizing it there.
All right, let's talk a little bit about the ghost of Vibe Sessions past, and it's a great headline from Bloomberg. There's a lot wrapped up in there. We'll talk about that when we return.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The cold weather is here, and if you haven't done it yet, now's the time to start planning your winter getaway to the U.S. Virgin Islands. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Paul, who is the ghost of Vibe Sessions past?
Who is it specifically?
Yeah, who's the ghost?
The Fed?
No, I'm asking what's the ghost of Vibe Sessions past?
This is a term that was coined by, I believe this is a Bloomberg piece. Yes, a Bloomberg piece, particularly one of the contributors, Kyla Scanlon, who created this term
about a year and a half ago. We talked about it on the show.
Well, it just ticked me off to even kind of see it quoted here. So I was reading this in a huff. But basically what it was going over is the pessimism about the economy regardless of the actual economic situation. And it ties into some of the misery index data that we've spoken about previously, where if you look at unemployment, GDP growth, all these other economic indicators that in 23 pointed to really strong economic positioning as a country, compared with the overall sentiment from its population, there's a huge divergence. There's a huge gap between how the economy is performing from a data perspective versus how people feel about it. And really, we've talked about this before, it comes down to inflation. It really sucked to have 2 or 3 years of high inflation, and consumers don't operate like economists where they focus on the percentage change 12 months trailing. They think of it as actual dollars. Grocery store bills are not what they once were, and it takes a little while for all of us to catch up to what things cost.
So why is that haunting our holidays right now?
This piece is driving me crazy, Chuck. I gotta say.
Tell me more.
Well, the reason it's annoying me so much is that so many of these items in the stack today, I guess I'm just going Scrooge on everyone here, we should feel so bad for consumers and millennials. It's so hard out here. Inflation is a reality. We've been dealing with it for the last couple of years. I don't like it. You don't like it. The things cost more. But ultimately, this is where we are situated today. We can't reverse back the inflationary pressure we've seen over the last couple of years. There's not going to be deflation. Prices aren't coming down. So we do have to adapt to it, as difficult as that is to say. And to me, in this piece here, it's a little bit too much poor me, poor us. Am I just being too much of a Scrooge?
Well, here's the thing.
And also vibes, it just is an overused word. That's really probably what's triggering me as well.
You don't like the word vibes?
I don't not like it. It's just that it's being overused.
Well, here's the thing. So I go back and forth on this.
Okay.
And it's because ultimately how someone feels about anything. I mean, look, it just it is what it is. It's not a fact, it's a feeling. So you can't be like, if someone tells you don't be angry, doesn't that just make you more angry?
Yes, and also
It
when
does.
you have the conversations with your wife about something that irritates her or vice versa, each person's going to interpret something a different way. Something that bothers you may not bother me, and vice versa, right?
Beyond that, none of us experience this economy in the same way.
Mm-hmm.
None of us have the exact same jobs with the exact same families and the exact same expenses. So we've all got our own different views on this. And ultimately, when we talk about why people, we've talked about this a lot, but why people don't feel good about the economy, it comes back to one thing, and it's inflation. You don't have people saying, gee, it's way too hard to find a job. That certainly is not what people are. You really don't hear about that. You do hear still from some business owners who are like, hey, I can't keep good help, but look, as a business owner, this is one of the risks you take. You're not entitled to good help all the time. I mean, it's just not something that you can always have. I know it was, like that for a while, but it's not always that way. The inflationary piece is why people are still not happy. And, we try to distill it down to, well, in the surveys, there's a political tilt and, depending on how people self-identify. But that's always been the case. You can look back on data for 40 years, and when Democrats are in office, Democrats rate the economy better. When Republicans are, Republicans do, and vice versa. It's just how it is. So I think that when we look at this and, hey, why do people still not feel great about where they are? I have a buddy of mine who, again, I can't tell him he's wrong on this. He goes, Chuck, I'm making more money than I've ever made in my life right now. I'm doing better than I ever have.
Mm-hmm.
And I feel like I can't afford the stuff that I used to. And yes, the inflation data overall says, yeah, you probably should be in a better place than you were 3 years ago still. But for him, it might not be because his family might buy different things or have different priorities. And so I think there are a lot of people out there where that's the case, where they say, look, it's not a problem where I'm making too little money.
Right.
I think most people right now say, look, I'm making a lot of money actually right now compared to what I used to. The problem is it's not going as far as it used to. And this is why inflation is one of those things that governments hate to see pop up. Because in a vacuum, hey, you're making $100 a week and you go up to 105. Well, fine. If you're still just spending 105 instead of 100, you're in the same place.
Sure. But
it feels worse because you think you're getting ahead, and then you kind of get slapped back down by those prices, and so it feels worse. It's kind of like you go to the gym,
mm-hmm.
and you're like, okay, I'm going to put up 225 on the bench today.
Yeah.
And you do it, and you're like, oh, this is great. And then the guy next to you does 285, and you're like, you got to be kidding me.
I'm never going to catch
I'm never
him.
going to get there.
I'm not.
That's what inflation feels
I'm
like.
not.
It's the guy benching more than you at the gym. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. communities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts this year. What is the new exemption for Massachusetts? And does that mean that a married couple living in Mass with $4 million in assets could eliminate their estate taxes?
Well, that is true. But let me expand on it a little bit. There is good news. Massachusetts' estate tax exemption has been increased from $1 million per person to $2 million per person, which in essence is great news because now with planning, and remember folks, with planning, a married couple can effectively shelter $4 million from estate taxes, whereas before, with planning, you could only shelter $2 million from estate taxes. But remember, if you don't do your planning and you don't have a trust in place, you will end up wasting one of those exemptions. And so by not planning now, although the exemption went up, which is good news, by not planning, it's twice as costly for people if they don't get their trust done and their planning done. You're just making a much bigger gift to the state of Massachusetts by not doing your planning.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection, right now by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory as Wall Street digests the November jobs report unveiled earlier this morning, where 199,000 jobs were added last month, stronger than estimates of 185,000 jobs. Unemployment rate also ticked lower to 3.7%. At the moment, the Dow is up by 0.25% or 86 points. S&P 500 also up 0.25% or 11 points, and the Nasdaq up by 34 points, also up about 0.25%. Russell 2000 up over 1% this morning. 10-year Treasury yield up by 10 basis points in reaction to the jobs report, now at 4.23%. And crude oil up nearly 3% higher today, trading at $71.34 a barrel. Lululemon shares up nearly 4% after the athletic apparel retailer posted sales growth in the U.S. and its international markets. For the most recent quarter, sales came in at $2.2 billion, or 19% higher from a year ago. The company did, however, reveal softer than expected holiday guidance, although they did note it was a positive start to the season. Meanwhile, Honeywell has agreed to a $5 billion deal to acquire Carrier Global security business in an effort to further bolster its portfolio. As part of the security business, products include electronic locks for large companies, hotels, and hospitals. Shares in Carrier up by 5%, while Honeywell stock is down by about 0.5%. Elsewhere, Amazon announced yesterday it will pilot a new grocery subscription program where Prime members will have the option to pay $9.99 a month to get unlimited grocery delivery on orders of more than $35, and will also have access to 30-minute pickup on orders of any size. The pilot program will be rolled out in Denver, Sacramento, and Columbus. Amazon shares are mostly flat. And First Solar was upgraded to overweight from equal weight by Morgan Stanley, saying it sees a number of drivers that can push the stock sharply higher next year. The bank also upped its price target to $237 per share, or 64% upside from Thursday's close. First Solar's stock is up by 4%. I'm Tucker Sylvan. That's Wall Street Watch.
What was the name of that company?
Shut up, you.
What is it?
It's called Shuddy.
Oh, well.
Shuddy Solar.
Don't think I'll be buying anything from them. Gosh.
First Solar.
They've got an attitude,
I'm
apparently.
on 4 hours of sleep after the Patriots game. So.
Well, that was your fault.
Did you stay up for
Oh,
the whole
no.
I couldn't turn that off.
You don't get to stay up for a game
I do.
and then complain about being tired because of a decision you made.
I believe I just did.
You got a crying baby? Fine.
That was a combination of that, too.
Even that's a decision that you made way earlier.
That is also true.
But
I will complain.
you don't get to stay up for a meaningless regular season game and then say, I'm so tired.
I just did.
I resent that.
It's his obligation as a fan.
Piece from the Bloomberg today. It's titled, You're Better Off Going All In on Stocks Than Bonds, according to new research. It's from a paper titled Beyond the Status Quo, a Critical Assessment of Life Cycle Investment Advice. And I'm going to quote here from one of the co-authors of the paper. As long as the equity investors are able to stick it out, they end up being better off with very high probability than someone who's trying to smooth out those short-term investment movements by diversifying into bonds. So there's a few things to unpack here. The first is that big qualifier that the sentence starts with, as long as the equity investors are able to stick it out. Because one of the challenges with investing is doing exactly that, sticking it out when things get ugly. Anyone who's worked in the investment business will tell you that you get 10 times more calls from clients saying, hey, I need you to, get my portfolio more conservative when stocks are down than when they're up. And so that's the real challenge. It's the emotional piece of riding through that because, there's something that I don't think you learn until you actually live long enough is that it's very easy to just say, well, if you just, all you have to do is manage through a couple bad years and everything will be fine. The experience of living through 700 days of suck in an investment portfolio is very different than just pointing to 2 years on a chart and saying, well, you just got to get through that and then it'll be fine.
Right.
It's hard. It's not easy to do that emotionally. And so I think that this caveat here is huge because a lot of investors can't stick it out. A lot of people always say, gee, I wish I had bought Amazon back when it IPO'd. and I say, okay, so you wish you bought, one of this great performing company back when it IPO'd. When it was down 98% from its peak in 2002, are you telling me that you wouldn't have sold it then or somewhere along the way because you just knew it was going to be this one that was different? Because at that time in 2002,
They were selling books online, basically, right?
how is that any different from Pets.com?
Right.
It's, okay, they're both down like 98, 99%. Screw it, get rid of both of them.
Mm-hmm.
How many people did that? I'm sure a ton, because otherwise stocks don't go down 98%.
You hit on some of the points that I really wanted to touch on. One of them, that caveat out there, if you can stick it out, a lot easier said than done. The other thing that I wanted to push back at a little bit here is there's another quote in the piece that said, researchers found periods in which bonds and stocks moved in unison are more common than people probably realize. I guess that's, again, a very broad caveat. But if you study historical returns, I'm not going to argue with them. Historically, we all know 1926 through 2023, stocks outperform bonds on a 12-month rolling basis more than close to 70% of the time. It's really going to be a better performing asset. However, if you look in times of strife, you do see that bonds outperform stocks. 2008, a 35% drop in the markets. Again, this is on a 12-month rolling basis versus long-term bonds, up 6% in that period of time. Tech bubble, bonds up 13% in this period. 2018, bonds up 1 or 2%, stocks down 13% over a 12-month period. All of these points are to make that stocks, if you can go 100% equity, I'm not going to argue with you, they are going to outperform. Having that diversification of bonds, it's easy to write this piece after 2022 where both the equity market and bond market got blown up pretty badly because rates rose so much. But ultimately, there is historical evidence to point to the fact that having bonds in your portfolio can be beneficial in times of strife. And that's what I wanted to push back at, this idea that they move in unison more frequently, maybe than people expect, but that's a big caveat. Historically, it's not always the case.
And also, the best portfolio for any individual is the one that they can stick out all the way through.
Mm-hmm.
Because if they abandon it when things get bad, then you don't experience the good stuff that comes with whatever that portfolio is for the long run. So, again, I think if an investor says, hey, I want the greatest long-term returns, why would I own bonds? There's no good answer for that. Like, there isn't.
No.
But it comes with the idea that, hey, if there's and again, you don't see these often. You see them, every 20 years or so. If there's a 40% drawdown in equity markets, you're going to go and sell everything at the bottom there because you got nervous? Every time, every 18 months when there's a 10% correction, you're going to sell everything because you get nervous? If you can honestly and truthfully say, no, I haven't and I won't, then okay, you can consider going that route. But if at any point in the last 15 years, when things got rough, you said, gee, I got to push this button and get out, then no, you can't go that route because you don't have that button that says now's the time to get back in.
No one does.
Most people don't. And if you think you do, then you either probably shouldn't be listening to the show because you're smarter than us, or you're lying. It's one of those two. I'm happy to accept either one. We're not the smartest guys out there.
No.
I want to touch on Tucker, was this a text or an email that you forwarded over to us?
Text to the show at 617-362-1385.
That's the one. The text is, can you talk about how the Fed can't raise rates because it'll be impossible for them to service the debt? So let's talk about this idea a little bit. The first is, if we're being honest, the Fed already has raised rates pretty meaningfully. 2 years ago, the Fed funds rate was at 0. Now it's at 5.25%. It has resulted in a much higher interest expense for the U.S. Treasury. And that has caused added deficits, or larger deficits, on an annual basis, which have then added to the outstanding debt as well. So these are all things that are absolutely true. When it comes to the fact that it's impossible for the U.S. to service this debt, the answer is, to this point, it hasn't been. At some point, it may become a problem, but the U.S. is fundamentally different from countries like Argentina in a number of different ways. most notably the amount of dollars that trade overseas and international demand for said dollars, which, look, even though China's trying to make inroads there, the U.S. dollar is still by and away the dominant currency both for international reserve holdings and for international trade finance. The other piece on this is that ultimately no country can't service its debt. It's a question of how much inflation do they create in the process of servicing its debt. And this gets back to, hey, where does inflation come from and how much debt do you have that's outstanding? At some point, maybe it becomes a problem, but it hasn't to this point. It's not to say that it won't, but to say that, hey, the Fed can't raise rates because it'll be impossible for them to service the debt. Fed's already raised rates, and in fact, long-term rates have come back down in the last month, suggesting that it's not a debt service problem that investors are concerned about. At some point, the overall supply of U.S. bonds may be an issue, but it's not today. So I think this is a good question in terms of, hey, could this be an issue? And the answer is, yeah, it could be at some point, but it hasn't been that problem today yet, even though it may develop into that at some point in our lifetimes. So thanks for texting in. Again, the text line is 617-362-1385. Let's take a quick break here. When we come back, we'll talk about what your friends can teach you about money.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
With this year quickly coming to a close, now is the perfect time to review your financial situation. Planning for later life is a year-round effort, and with the calendar about to change, there are several important numbers to be familiar with as we turn to the new year. Hi, this is Mike Armstrong from the Armstrong Advisory Group. In our new guide called Key Numbers to Know for 2024, we'll discuss a variety of numbers related to retirement account income and gifting limits, Medicare Part B premiums, and marginal tax brackets. Learn about how these numbers may help you with your planning for the upcoming year by calling our office today at 800-393-4001. Ask for your copy of the free guide called Key Numbers to Know for 2024. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Piece in the Wall Street Journal today. It's titled, "What Can Your Friends Teach You About Money?" or "What Your Friends Can Teach You About Money." And I'll quote here, millennials and members of Gen Z prefer to seek financial advice from each other than from parents or financial professionals. They don't like overwhelming spreadsheets and marketing material written in seemingly foreign languages. They don't trust big banks and institutions trying to sell them on investment strategies. And they're not wrong. There's a lot to be learned from comparing numbers with peers, from sharing salaries to talking out big decisions like home or car purchases. Your thoughts, Paul?
When's the last time you compared salaries with a friend? That's the first one I'll push back at. Oftentimes,
I think people should more. I think it's a taboo that is just dumb, because I think it prevents us from understanding like the context of how other people make financial decisions.
But are you involved with other people's financial decisions? Your friends, like, is that even of your concern?
Well, no. If you're talking with a friend and they're saying like, "Hey, I'm thinking about buying a house," and
oh, sure,
like again, I'm
justify financial conversations, but
yes,
it shouldn't come up at a party if
or you're talking about, "Hey, we're thinking about heading on vacation this year. Do you want to try to come with us?" Well, I'm not sure that I can, those types of things. One time, I still remember this. I had someone, it was the husband of someone who came up to me and said, "Oh, hey, I'm so-and-so, I make X." Like, that was the first.
Whoa.
I'm like, oh, like, that's weird. No, I'm not talking about doing that. That's very odd. But if you're trying to have, like, these...
To put context to financial conversations.
Yes.
Yeah. I certainly agree with you there. The other piece that I push back at, too, that was just mentioned to you off air is that oftentimes, if, let's say, someone is working in the medical field, for example, and they're giving you financial advice or recommendations, one point is what works for some doesn't work for others. Real estate investing for some people can be very lucrative and something that can be fantastic to diversify your overall net worth with. You just have to keep in mind that, for example, someone like myself, if I were to buy a rental property, to me, it wouldn't be as good of an investment because I'm awful when it comes to any handyman type of repair stuff, meaning that I'd have to spend a lot to make sure someone else was upkeeping the property. It would take away from my cash flow. Someone who's a carpenter in the trades, they could do a lot of work themselves, or they may know some other people in the industry that can help them. So there's a difference, right? What works for someone may not work for me. And also, if you're not in the field, you won't know all the ins and outs of it. Obviously, we're biased here being financial professionals, but I do feel like a lot of times the anecdotal stories that you get from your friends often may work better from them than it would for you. And also, they may not have all the information and often are speaking in very large generalities when they say, do this and you'll get this return.
The other thing in particular is just when you're heading into new stages of life where, it's things that are happening for the first time, especially if you're the first one through the breach in any of those, like you're the first one of your friends to have kids or first one to buy, you might not have anyone that you can rely on in those cases. The first person to retire out of your friend group, who do you turn to then? So these are just some of the situations to think about. Folks, the Armstrong Advisory Group, what we do all day, every day, is provide advice to people about their financial situations. Regardless of age, regardless of specific financial conditions, there are questions that come up that you might feel more comfortable talking to a professional about. If you happen to fall into that category, the phone number to call is 800-393-4001. That number again is 800-393-4001. 4001 to schedule a time to speak with an advisor. You can also go to armstrongadvisory.com and click the Get Started button. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Elon Musk tweeting or posting or whatever we call it these days that Bob Iger should be fired immediately from his role at Disney. Not really sure why this is news, because last time I checked, don't believe Elon Musk holds any Disney stock. I don't believe he's on the board at Disney. And I'm not really sure why he cares, because he has enough to keep him busy.
I would agree with you. I don't know why a lot of his behavior recently has been hard to justify what the rationale is after going after someone like this. That company, man, that is just in quite a free fall. It was already facing a ton of challenges, but the behavior of Elon Musk.
Which one, Disney or X?
X, yes.
'Cause Disney's got some of its own problems, but
it
different
does.
ones.
Not as dramatic, I would say, as X. When you're losing many of your advertisers on your platform, which generates a lot of the revenue that you generate as a company, that's problematic.
So yeah, I don't really know. Maybe we should just stop covering, like. Not that you brought this, like
I just thought it was funny.
No, it's like
he's like doubling down on what he did last week.
I just, if you're trying to sell ad space and all you're doing is talking about how the people who should be advertising on your platform should be fired, that strikes me as kind of a bad way to go about attracting advertisers.
Or telling them to go blank themselves. That also is just not great advertising.
Yeah. So I don't know. We'll see. We'll see what happens here, but I don't know. It's very odd. Let's take a quick break here. When we come back, a lot more to come on the Financial Exchange, including AI and Apple, coming up. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled The Key Numbers to Know for 2024. Mike, when it comes to how much someone can contribute to a 401k plan or 403b plan next year, what do those contribution limits look like?
Yeah, so you're getting a slight uptick from 2023, where it was sitting at $22,500. You're now going to be up to $23,000 for those 401k contributions. And in addition, if you're over the age of 50, you're going to get an extra $7,500 that you can potentially put in there. All of that is before any sort of employer contribution or match. So you're now getting up to $30,500 in total if you're over the age of 50.
Mike, what about for folks who don't have access to an employer-based plan but instead need to contribute to an IRA or traditional IRA?
Yeah, so that's where those limits are much, much lower. So this coming year in 2024, you're looking at a $7,000 contribution limit for traditional and Roth IRAs. There are all sorts of rules around this in terms of income phase-outs, who can contribute, if you're employer-sponsored or not, if your spouse is employer-sponsored or not. So there are some tricky pieces here. There is also a completely different set of rules and limits when it comes to self-employed individuals. So definitely other things to know if you maybe own your own business and have a SEP IRA.
Our guide this month is titled The Key Numbers to Know for 2024, and it talks about some of the many changes happening when it comes to contribution limits, cost of living adjustments, and other numbers. Two ways to request it. The first is by calling 800-393-4001. The second is by visiting armstrongadvisory.com. That number again is 800-393-4001. The
proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Early estate planning is crucial if you want to avoid massive tax consequences and protect your assets. Cushing & Dolan are experts in estate planning and taxation, and their new free guide can help you do just that. It's called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. You've worked hard to provide for your family, so if you haven't done your planning yet, call Cushing & Dolan today at 866-848-5699 and get this free guide called The Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
A little bit after 11 o'clock here on the Financial Exchange, and we've got some modest green on the board today. The Dow is up 75 points, the S&P's up 10, the NASDAQ up 39, all about 0.25%. We've got the 10-year U.S. Treasury selling off 12 basis points to 4.25%, 4.25. We got oil back up above 70 a barrel here. It's up $2.02 a barrel to 71.36. And we've got gold down $20.90 an ounce to $20.25 currently. It is Chuck, Paul, and Tucker with you. And at 8:30 this morning, we got the latest jobs report for the month of November. 199,000 jobs created for the month of November. We also saw September numbers revised down by 35,000, and October did not see any change there. We saw the unemployment rate drop from 3.9 to 3.7%, and we've got average hourly earnings up about 0.35% for the month. So a little bit of a reacceleration there when it comes to how much people are earning on an hourly basis. This, I think, again, coming in a little bit hotter than people anticipated, resulted in a modest sell-off in bonds and equities at this point, again, up just a little bit, with the idea being, hey, this jobs report probably takes recession off the table by January, and as such, the Fed doesn't necessarily need to pivot as quickly. Is that a good summary?
I think you hit on all the key points there. We saw wages relatively in check as well. So just more data to be consumed here before we really make a call one way or another on this report.
Paul, let's talk a little bit about Allen Iverson, the 48-year-old Philadelphia 76ers veteran who's been retired from the NBA since 2010, has been in the news an awful lot over the last year, and I'm still struggling to figure out why.
It's his comments about practice. People continue to break it down.
We are talking about practice. And no, what we're actually talking about is artificial intelligence. I had the wrong AI, and I got a little sidetracked. But there's a piece in Bloomberg talking about how AI is likely to create more jobs than it kills. And the answer is yes, I tend to agree. Anytime that you have any kind of transformative technology in the aggregate, it ends up creating far more jobs. but those jobs are doing different things, and this is something that we have to reckon with for a couple of different reasons. The first is, hey, what do those new jobs pay relative to the jobs that they are replacing? And the other piece, and I think this is more an American thing than anywhere else based on kind of what I've experienced in my travels, we really identify with our jobs an awful lot.
Mm-hmm.
I am a plumber. I am a teacher. I am a policeman. I am a farmer. Like, we really identify with that a lot. And if your job is removed for any particular reason, psychologically, it's a lot to deal with. And it's one thing if your job is, okay, it's been outsourced to India or it's been outsourced to China. That job still exists. What happens if your job just doesn't even exist anywhere anymore because it's been replaced by a machine? And this is something that every generation reckons with to a certain extent, just in different industries. The horse and buggy drivers of the 1910s, did they all just become taxi drivers? I don't know.
Mm-hmm.
I don't know if they were just like, no, like, I'm a horse and buggy driver. I'm not going to drive that automobile. How dare you? Good afternoon. You know, it's like, this is something that we're going to have to reckon with, but ultimately, productivity growth in really the way that we define it is, can you make more stuff using fewer inputs? One of the biggest inputs you can reduce is the human one, but how do we manage it in such a way that you don't have huge social dislocations as a result?
That question is the biggest one that looms over AI, but this piece, I thought it was well written to point out that oftentimes people get concerned with new technology, that there is a loss of jobs. You think about with the auto manufacturing industry where robots have replaced a lot of the jobs on the assembly line. There's still a need for workers in that space, manufacturing in other areas as well. It's a really important point to make that we want this economy to continue to grow, be more productive, for us to have more demand for products and services, because if you're an investor, ultimately if you look at stock growth over time, it typically correlates pretty strongly with GDP, the economy growing more, us consuming and producing more goods. So we should all want that. Technological advancements like this, whether it's e-commerce, which has been around for a while, but particularly after 2020 has really surged in popularity, that it is easier for us at your fingertips to get and acquire more stuff more efficiently. All of that's good for the economy and for us as investors out there.
So the one that I always come back to on this, and you can look at it both domestically and worldwide, but agriculture in the 20th century, in the U.S. right now, we employ about 14% the number of farmers that we did previously. Yet we still feed the whole country.
Mm-hmm.
Are all those people who would otherwise be farmers unemployed now? No, there's always more work to do. Whenever you solve one problem, all you're doing is creating the next one for yourself.
It's like owning a house.
It is. Okay, great. I don't need someone just to, write copy for whatever this thing is that I can now do with generative AI. Great. Now that I can produce way more copy, I need more salespeople because I have so much more inbound traffic that I need more people to sell. And then, hey, because I got more traffic, I need more people to make stuff. This is how we see productivity, growth, and improvement. And ultimately, this is a really good thing. But how we manage it is a challenge, because especially if the change happens quickly, that's where you end up with a bunch of workers who have skills for now obsolete jobs. And what do they do?
Mm-hmm.
What do they do, Paul? What should they do?
What should the workers do?
Yeah, what jobs should they all do now? All the people who get obsoleted by AI. And yes, I did just turn obsolete into a verb.
They probably should sharpen their skills more towards something tech-based or being able to run programs.
Well, I don't think learn to code is a good answer anymore now, because the AI can code.
Code checking?
Code checking?
Code checking, making sure.
You're saying coat checker. You want them to go and work?
COD.
You want them to become doormen.
That's another possibility as well.
There's going to be a resurgence of clubs, and we're going to need more coat checkers.
What do they do in the summer?
This is such an obscure question. How am I supposed to answer this?
They could be a towel checker. I'm actually kind of surprised that at beaches you don't have something like that where, I don't want to get, sand on my towel. Can I check it? I know that's kind of a dumb thing.
Yeah, that's kind of dumb.
You want to be able to lay on your towel.
Can we go to break?
Yes.
Okay.
Yeah, let's take a break, and when we come back, we'll do whatever Tucker tells us to right after this.
Trivia.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
With this year quickly coming to a close, now is the perfect time to review your financial situation. Planning for later life is a year-round effort, and with the calendar about to change, there are several important numbers to be familiar with as we turn to the new year. Hi, this is Mike Armstrong from the Armstrong Advisory Group. In our new guide called Key Numbers to Know for 2024, we'll discuss a variety of numbers related to retirement account income and gifting limits, Medicare Part B premiums, and marginal tax brackets. Learn about how these numbers may help you with your planning for the upcoming year by calling our office today at 800-393-4001. Ask for your copy of the free guide called Key Numbers to Know for 2024. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Well, if you stayed up for it, last night the Patriots, let me do the old sponsor-roo here, as I was up late last night. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now, that's eating good in the neighborhood void where prohibited, dine-in only. Now, as I was saying, last night the Patriots beat the Steelers 21-18 in Pittsburgh. While last night's game was a matchup of two bad teams, over the years, these two teams have had many important regular season and playoff matchups. The Pats and Steelers have met 5 times in the playoffs. 3 of those games were AFC Championship games. Trivia question today: which team has the better record in playoff matchups, the Patriots or the Steelers? Once again, which team has the better record in playoff matchups, the Patriots or the Steelers? Be the 10th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, why are central bankers worried about little old me getting a raise?
Inflation is the easiest way to answer that question. Basically, as you continue to make more, you and I continue to earn more, then there's more dollars for us to go out there and spend, and it's easier for us to absorb any price increases from businesses. If we continue to consume stuff, then businesses can hike up their prices, and with higher wages, we're more easily able to absorb those price increases. And that what was occurring when we saw inflation peak in around 9% last year, is that you saw tremendous wage gains continuing to keep pace with a very hot labor market. And as a result of that, businesses on the supply side were getting hit a bit too. Costs of goods were going up more, but the demand was there to continue to consume items, and that's why you saw this inflationary spiral that we were on for the last, right, still continue to get off of that track.
The number that I love to look at in the U.S., just because it also, I think, is a really good proxy just for overall economic growth, is what we call aggregate weekly payrolls. It's pretty much looking at, hey, how many more people have jobs than did previously, and how much more are they making during those jobs? That's the question that it's asking, and it combines both of those. So if you look at the period from 2011 through 2019, that average aggregate weekly payroll growth was typically running about 5% a year, 4.5% to 5% a year. And what this worked out to in reality was that GDP growth would typically be somewhere in the ballpark of, and the reason why this, at least in the U.S., is a good proxy for overall growth is because 70% of the U.S. economy is based on consumer spending. So what you'd end up with is that inflation was pretty close to 2%, and GDP growth was pretty close to 2%, and that got you, most of that aggregate weekly payroll number typically. Well, if you go back to March of last year, aggregate weekly payroll growth was running 11.3%. And sure enough, you had inflation right around 10%, and GDP growth was pretty much 0 because all of the potential GDP growth got eaten up by inflation because we didn't have enough stuff to sell, and we could relitigate it for years, but it's done. We're moving on. Today in the U.S., aggregate payroll growth is down to 5.4%. It's within sniffing distance of pre-pandemic trends. And so why this matters is that there are a few different things that matter when it comes to inflation. The first is demand. And if aggregate payroll growth is only running at 5%, it's tough to have meaningful inflation above that for any period of time just because people can't afford it. Like, even if they wanted to pay those higher prices, they couldn't because they run out of money.
Their wages aren't keeping up.
The second piece when it comes to inflation is supply. We saw this in 2020 and 2021, and even we're still seeing it in some areas now, but mostly it's resolved. But supply chain issues and this and that, I mean, how many times do we talk about ships off the port of Los Angeles and this and that? that's a second piece of it. It's not just the demand side, it's the supply side as well that can drive inflation. The third piece, inflation expectations. The psychology of it. If people expect inflation, they're likely to ask for bigger raises. They're likely to be more willing to pay higher prices now because they think it'll be more expensive in the future. And so that feeds into it as well. The supply piece is pretty close to resolve now. The demand piece is getting there, at least in the U.S. Again, aggregate payroll growth is within a 0.5% of where it was pre-pandemic. And the other piece that was notable this morning, we got data from the University of Michigan. They publish it every month on consumer sentiment. And inside there, they include inflation expectations, both for 1 year and 5 years. The 1 year number dropped from 4.5% expected inflation to 3.1%. Largely a function of gas prices. Inflation expectations track gas prices really closely.
Yeah.
The 5 year number dropped from 3.2 to 2.8. So some improvement on that side as well. And so this continues my line of thinking where in the next 6 to 9 months, a rebound in inflation is simply not something that I think you have to be meaningfully concerned about. I think if the economy does start to accelerate again, then maybe you start to worry about that in the second half of next year. But as of right now, the demand side is trending down towards where you want it to be. Not recessionary, but cooler.
Mm-hmm.
The supply side is mostly fixed, though there are still some issues. And the expectations piece is starting to come in line as well, but it's only one data point, so we need to see more of these, more improvement. We need more.
Yeah, the other two things I'll note there is that we know that shelter is going to be a tailwind for those inflationary reports as there's a 6-month lag there. So when you see the CPI data come up for the next couple months, that will be something that will benefit lower inflation in those reports. And then secondly here, you're just going to have a difficulty matching the economic growth that we saw in Q3 at 5%. It's just going to be hard to really keep at that pace. The caveat remains on the energy side of things, it's impossible to predict where gas prices will go. That's something that could lead to perhaps that inflationary shock if we saw something break out in the Middle East and gas prices soar. But to date, gas prices have remained, what were we,
We're at 3.18 right now.
Okay, yep.
Yeah, we're down another 2 cents today nationally. We were talking earlier this week. I've seen the first 2.99s around New England in the last week.
A client was mentioning that to us as well. Yeah, so that hasn't picked up just yet, but you never know what can happen.
We're back, baby.
Yeah.
$2.99 gas, we're back. Apple aiming to make a quarter of the world's iPhones in India within the next 2 to 3 years. They've been scaling up these plans gradually, but this would represent an acceleration for them in terms of building their flagship product in India. It's a very different environment than China because obviously they're very different countries. I know that they get lumped together because they both have over 1 billion people, but Apple doing this, in my mind, is going to be huge, not just for them, but again, the ecosystem that follows Apple. It makes it easier for other smaller companies to then follow that blueprint and say, here's what we need to do in order to be successful building somewhere other than China as well.
The problem with this had been the criticism on the Indian government that there's just a lot of bifurcation between different areas of the country. It's very difficult to get things done. The infrastructure is much weaker than China. And if Apple can be the pioneer to kind of further your point, Chuck, and establish roots there and do a significant amount of manufacturing there, like you said, other companies will follow suit with the proof that one of the biggest companies out there is able to successfully manufacture there. This, to me, the 25%, I would have anticipated that this was going to be something that was 2025, 2026. So it's, I guess 2 to 3 years. That's kind of in and around the same sort of time frame. But there was some skepticism here on this target when I had read about before because of those barriers that I had mentioned previously.
Yeah.
It's just not easy to operate in India, but this is a direct impact from everything that we saw in the pandemic where you had to focus on diversifying your supply chain. Apple trying to make significant steps in India to have an other option besides just China.
Taking a look at markets as we head towards the bottom of the hour, the Dow's up 19 points, S&P up 3, NASDAQ up 20, so pretty much flat on equities. Bonds continuing to sell off modestly today with the 10-year up 12 basis points. Quick break here. When we come back, we've got the trivia answer, and we're talking potatoes.
bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There actually is. Now, we talk about, doing estate tax planning, which I tell you should always do. So even higher net worth clients should put together their basic estate planning. I call that the foundation of their estate plan, of anyone's estate plan. And for higher net worths, to be using, revocable trust. There may be one or there may be two, but you want to put those together first. And that helps us shelter what we can. But to leverage your estate tax exemption that is going to be going down in 2026 to about, $6.5 million indexed for inflation, how do we use it? We can gift it. And if you gift it away, think about what you want to gift, but you can put it into another trust called a gifting trust, a spousal lifetime access trust that allows the spouses each other to enjoy what's in the other one's trust, but you've effectively given away the asset. So all that you've given away plus all the growth will be estate tax free moving forward, and it can even skip a generation from there. So planning is critically important.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection right now by calling 866-8 848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Trivia question today was, which team has the better playoff record in playoff matchups, the Patriots or the Steelers? That would be the Patriots. The Pats are 4-1 against the Steelers in the playoffs, and the Pats have won all 3 AFC Championship games played between the two teams. We have 2 winners to announce today. Winner of the Financial Exchange Show t-shirt today was Alan from New Britain, Connecticut, and the weekly winner of the $100 Applebee's gift card was Matt from Warner, New Hampshire. So congrats to both winners today. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Paul, I got something for you if you're interested.
What do you got?
I got gateway vegetables.
What?
Do you want some gateway vegetables? Tucker, what about you?
My wife could tell you that I could use them because I really lack in the vegetable
Tucker,
department.
you interested?
What is a gateway vegetable?
Well,
what is this?
It's in this bag right here. And
weed?
It's a gateway vegetable.
I've heard that. Yeah.
It's $6 for 5 pounds.
Ooh.
It's potatoes.
It's not garlic, is it?
This is again. No, that's $7 a head. We all know that.
Oh yeah, my bad.
Damn inflation.
So we got this piece in the Wall Street Journal. Does that potato count as a vegetable? The new polarizing food debate, and it talks about how the industry trade group for the potato, which is the National Potato Council, or the NPC, if you will, says that spuds are a gateway vegetable that encourage kids to eat more vegetables. So the older I've gotten, the more I realize that when you start getting into like the classification for how the USDA looks at different foods, it's all just trade groups trying to get their product pushed into school lunches more than anything else. Because that's it's a huge sell for these trade groups. And so I don't really care if a potato's a vegetable or a starch. You could even call it a fruit if you want, if you sprinkle a little honey on there. I don't really care. Whatever it is, it's fine. I know it's not a fruit, but you get what I'm saying. The point is, I think that ultimately, this is something that is influencing what ends up in, again, school lunches more than anything else. And when it comes to the dollars on this, it's just huge because trade groups will spend millions of dollars because these reviews happen every, I think it's 5 or 10 years, depending on the specific guidelines. And so if you are able to get your food into a preferred status, great, you got a gravy train, pun intended, of payments coming your way from schools over the next 5 to 10 years because your product is preferred.
I'm not going to pretend to know the exact scientific breakdown on what puts different foods in different categories. The 5 groups include vegetables, grains, fruit, dairy, and protein. It's interesting that you note the school lunches piece because I haven't thought about a school lunch in a long time, but it makes a ton of sense because you're just reaching such a wide swath of people so easily if you just can get that right classification there. But to me, meat and potatoes are a staple of most every American's diet out there. So whatever they are, starch or vegetable, still really important to have in the mix.
I think the big thing, I always go back to Michael Pollan, who I think has the best advice when it comes to food. Eat food, not too much, not too little. That's kind of mostly plants is his thing. And what he means by that is, look, when he says eat food, don't eat a bunch of overly processed stuff. Because as we've talked about, there's no guarantee that plant-based means good. Just see potato chips. Potato chips are plant-based. Really bad for you.
You know who doesn't eat vegetables? I learned this recently.
Who?
Guy who called the game last night.
Al Michaels?
Yeah, hates vegetables. He doesn't. He never eats them.
He's anti-veggie, huh?
He's just like, it's the most like disgusting thing to me to like just visually.
So does he just do meats then? I mean, like,
Yeah,
Primarily.
And look at him.
He eats a steak, I believe, at every halftime I heard.
Does he
somewhere.
have like?
Does he really? Oh.
Yes.
So I guess my question is,
He eats
what does he
fruit.
have for a side? Does he have like a chicken breast on the side of his steak?
I didn't get that far into the video.
Is
I
every
saw it.
meal surf and turf?
Possibly? If
Maybe
he's got that money.
He's
yeah.
paleo.
What's he do for breakfast?
I don't know. It was just about how he doesn't eat vegetables.
Eggs over easy?
Possibly.
That sounds
Seems
like
like an
what it could
over easy
be.
guy.
Yeah.
Early estate planning can have many benefits, especially if you want to protect your assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called The Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699. That's 848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I gotta say, this judge from Ohio is really my type of judge. There was an assault case that was in front of this judge where a woman threw a Chipotle burrito bowl at a Chipotle worker because, well, she wasn't satisfied with the burrito bowl, obviously. Which, again, I don't know what has gotten into us, but it just feels like there's more of this stuff now than there used to be. And the judge said, you know what? We've got a 180-day jail sentence with 90 days suspended. And the judge said, look, here's the deal, though. I'll suspend an additional 60 days there if you work 20 hours a week for 8.5 weeks at a fast food restaurant. And this is something that I love.
Awesome. This is incredible.
I mean, okay, you're going to be, that person to fast food workers. Fine, you go work in a fast food restaurant for 2 months. That, I think, is just, it's perfect. And this is the kind of stuff I think we should be doing more.
It's fantastic to walk another mile in someone's shoes. The best example of it, you need to have these types of jobs over the course of your lifetime to gain that experience, to understand how difficult they can be, because then when you're put in the customer's shoes, you can have sympathy for how challenging those jobs can be. Restaurant working or any type of just manual labor is really good for anyone to have development, because then you can have sympathy for the people who do really difficult work. I worked in a call center too.
I think that was going to be my next one.
Yeah. I worked in a call center right out of college, and from here on out, when I deal with the Comcasts and those 800 numbers of the world, I'm not always going to be the most pleasant, but I'm never going to take it out directly on the call center employee. It's more the overall frustration with a company, because I know sitting in that seat, it's not a glamorous position to be.
Even when I do get like angry at these call centers or whatever, like I can't like disclose enough. I'm like, I am not angry at you, but I am expressing my frustration towards this company of X, Y, and Z or whatever. Right. Like I make it crystal clear. I'm like, I have no problem with you, but
I always try to make the most sympathetic case possible, and that tends to work. Like, look, I really need some help here. I'm trying to do this. Yes. I don't know what to do. I just need some help. Like, and that I find works really well.
Sitting in that spot, I'd much rather hear that from someone, because then you're willing to help. Ultimately, I think intuitively, all of us want to try and help other people out. For the most part, there's some exceptions out there, but this is fantastic. There should be more of this out there, where it isn't some of these ticky-tacky fines and other things. It's just get real-life experience to understand. The airlines could certainly use this too, with all the flight freakouts that we've
You can't
seen.
send someone to be a pilot.
I know. Well, the pilots aren't dealing with the rip. A stewardess?
No, you don't want that.
There's a lab of training for that.
Imagine the plane goes down. You got to be trained on how to
but
evacuate.
They could be a plus one. They could be a plus one with the rest of the crew.
No, so I think they're like, okay, listen, you assault a flight attendant, you're riding in baggage on the round trip home.
Oh my god.
Yeah.
Fine.
Go down. No lights.
No lights. It's cold. You are riding in baggage with the way home.
You're next to the pets.
Yep. That's what. Fine. No jail time, but you are riding there, and you will never do that again. Those are the kinds of things you should do. I think.
Can't guarantee a buckle either.
No, they should have like a whole section down there,
like the brig.
Yeah, exactly.
The jerk section.
Yeah, the jerk section. That sounds great. Oh boy. So this is where we are now.
Yes.
Okay, let's take a quick break. When we come back, we're going to be joined by Paul LaMonica right after this.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we're now joined by Mr. Paul LaMonica, contributor at Investor Place, to talk a little AMD. Paul, how are you today?
I'm good, thanks. How are you guys?
We're doing great. And AMD this week, starting to maybe emerge as a real competitor to NVIDIA in the AI chip space, or is there still some work that needs to be done here?
Yeah, I mean, obviously, I think work needs to be done. NVIDIA has such a clear lead in this area. But that being said, AMD, Dr. Lisa Su, their CEO, announcing some pretty impressive partners for the new AI chips that they've just unveiled, having the likes of Microsoft, which clearly is a leader in AI thanks to its partnership with OpenAI and Sam Altman and all the soap opera that happened there. Oracle, many other leaders in tech, all using some of AMD's chips. And AMD has done a phenomenal job over the past couple of years of catching up to Intel in the processor space for PCs and laptops and servers, and now I think they're gunning for NVIDIA as well. So I think that the market is still in its nascent stages, that there's room for more than one just one chip company to be a major supplier.
Paul, is this one of the potential risks to NVIDIA in that when you look at the semiconductor space, their margins are far and away in excess of other ones, and if there's more competition in this AI, specifically AI, derived or AI-focused chip space, it would seem to me that those margins could come under threat even if they are still making some pretty significant sales growth.
Yeah, I think that is clearly something that investors need to be cognizant of, but it's probably not something that you have to be very worried about for a couple of years. This is still a market that is in its beginning stages, and we're looking at, just still a handful of key players. Obviously, NVIDIA and AMD, Intel, I'm sure, will do more in AI over time as well. So margin erosion that you often see when companies start cutting prices, as an industry matures, that's something that it seems is a really kind of a far down the road type of risk. I think right now we're still in the nascent stages of AI chips, and I don't think companies are going to be rushing to cut prices when demand is this strong.
Paul, how does an individual investor figure out what's actually going on in the semiconductor space, or is it just too complex, and if you don't have a technical background, you can't really figure out who's actually moving ahead and who isn't?
Yeah, I mean, I think it certainly helps to have a technological background to really understand the nuance and kind of like the nitty-gritty inside baseball of which particular chips and processors are, more powerful and faster than others. But at the end of the day, the semiconductor business is like any other company that makes products. And as long as you have an understanding of financial statements, you can see how strong the revenue growth and profit growth for some of these leading chip companies are. And I think that's what many average investors are banking on. You may not necessarily need to be a PhD in technology to understand why NVIDIA and AMD have been such great stocks this year.
Very good. Paul, we appreciate you joining us. Thank you so much for the time today, and I hope you have a fantastic weekend.
Thanks, same to you guys.
That is Paul LaMonica, contributor to Investor Place, talking about AMD. I now turn to the other Paul. What do you want to talk about right now?
I want to talk about the 124th Army-Navy game to be held at Gillette Stadium on Saturday. Lucky enough to be going to the game tomorrow.
Oh, you're going to be going?
I'm going to be going.
Oh,
yes.
nice.
Where are you sitting?
We have pretty good seats. My father-in-law loves this game and really went all out to get myself, my dad, and my brother-in-laws to the game tomorrow. There's going to be 6 of us in total.
Nice.
You doing a tailgate?
So I had a quick question for you on the tailgate front. We are doing a tailgate, but my father-in-law does not want to grill. I was curious what you guys would recommend on bringing food there. We're going so early that
It's
I
tough
don't
to bring a stove.
Yeah.
Well, no. So what to get for food? I was thinking pre-made sandwiches because I don't have the ability to go to a sub shop prior to the game because
There's
we're
one
gonna be
right down
leaving.
the street there, isn't there? Pretty well-known place right down the street.
Route 1 is just going to be an absolute. I mean, I guess if you get there early enough, but it's going to be an absolute.
He doesn't
party.
want
We're
to
getting there.
grill?
He does not want to grill.
Why?
Doesn't want the hassle of bringing the equipment. He
He
just
doesn't
wants
have
to
a
buy
small grill or
He just wants to
something?
buy cold cuts and slap them on.
All
Right.
right.
I prefer a little bit more of the tailgate atmosphere, and I just don't know if I have a good solution for it other than the
Are
pre-made.
you going to be bringing some sides at least?
Yes.
Okay. What kind of
the
sides
chips
you
and
bringing?
dip, the typical sort of stuff.
You got some potato salad?
We're going to buy some potato salad, yes.
Pasta salad?
Pasta salad, a little bit of
Okay.
that as well.
Don't make the sandwiches too far in advance because then you're
No.
dealing
Well,
with
the soggy bread,
yeah.
that's kind of why
It's a
I
problem.
brought this idea.
I would maybe bring your components and make the sandwiches there, quite honestly.
That's likely what's going to happen. The other thing I wanted to touch on here, this is cooler than my tailgate dilemma here, is that there's a tradition that goes back to the 1980s where both Army and Navy marathon teams will be running the game balls from Annapolis and from West Point to the stadium. This is a 400-mile-plus trek for the Annapolis Navy students. I believe I read here that 194 of them will be participating in getting the game balls there, and then a 200-mile journey for the West Point cadets that start at 6 a.m. on Thursday.
I did not know this. That's
And
amazing.
It's incredible. My father-in-law actually just sent me the piece earlier in the show here. Unbelievable tradition out there, and amazing amount of mileage to cover by these two schools. But you shouldn't be surprised, I guess, by any of the Army or Navy students out there. The stuff they're able to do is just way beyond what I would ever be able to accomplish in my lifetime, their determination and perseverance. So it should be a really fun
What's that,
event.
4 o'clock start?
It is a 3:30 start, I believe. And this is the first time, obviously, that Gillette has hosted it. They've been doing a lot of neutral sites recently over the last couple of years here. What a journey. They were knocking out 70 miles yesterday, starting at 6 a.m. in West Point and ending in Torrington at around 5 p.m. Just unbelievable.
Yeah, it looks like the next 2 years they'll be in Landover, Maryland, Baltimore, Maryland, East Rutherford, New Jersey, and Philly. So they tend to stick closer to that area just because it's a little bit easier from a travel perspective.
Easier
both
for the
teams.
runners, too.
Yeah, easier for the runners, Yeah, there's a reason why they don't do this thing in the Rose Bowl.
Yeah.
Let's take a quick break for, the whole weekend. And we'll be back on Monday. Whole lot coming up next week. We got CPI on Tuesday, so that'll be the big one. But have a great weekend, and we'll see you on Monday.